Hello and welcome to the Absa Travel and Hospitality webinar for 2022. My name is Liza Eustace and I head up the healthcare, hospitality and construction sectors at Absa Corporate Investment Bank. And today I'm joined by Marcel van Aulock, the CEO for Tsogo Hotels, and Kirby Gordon, the Chief Marketing Officer for FlySafair. Today we're going to talk about travel and hospitality and the impact that it's had on the sector. Whilst we know that the South African economy has been hit very hard by Covid-19, I think there's no doubt that the travel and hospitality sectors have been hardest hit. Whilst we've seen the numbers that reflect there is some recovery in the sector, the mobility appears to be 60 to 70% of pre-Covid levels. And we believe that the sector still is quite vulnerable to some structural and behavioral uncertainties. So to kick off the conversation, I'm going to ask Marcel, please to just give an overview of why you think the sector is actually so important and how we actually need to define and think about it for the course of this conversation.
So, people think about travel in terms of holidays. Bouncy ball on the beach, sunshine, corals, brightflash, etc. But travel incorporates a vast array of subsectors. You've got business travel, you've got sport events, you've got people going about their work. Hospitality, the broader hospitality sphere includes restaurants, any form of entertainment. So as an overall sector, it's probably as big for the SA economy as mining is and was in the past. And it's got an enormous impact in the amount of people it can absorb in job creation. And we've seen that impact in the amount of people it shed during COVID. We think it's probably about 1.5 million jobs that have gone. It employs youth, it employs all different levels of skill from completely unskilled all the way up. So it's a sector that covers, through the services and the facilities, just an enormous part of the economy, and you're not going to get back to a decent economy if this doesn't recover.
Agreed. And if we look at the Absa merchant spend data that has come out over the December period, we've, as I've mentioned, noticed some growth in the areas, but on a constant annual growth rate basis, some of these sectors are still really lagging behind. So if we look, for example, at lodging hotels, it's minus 8% from 2019 to 2021. Airline and airline carriers are, however, up 83%, and will be interesting to get your view on that later, Kirby. Travel agencies, tour operators down 39%, car rental companies down 21%, and tourist attractions and exhibits are down 17%. These are staggering numbers. So Kirby, if I can ask you maybe to start off by giving us an overview of what has the immediate impact been on your business in the airline industry, and what kind of trends are you seeing, expected and unexpected?
Absolutely. I think, Lisa, the truth of the matter is it's been a tumultuous time, more so than it ordinarily is. And aviation in South Africa is traditionally tumultuous. So to say that obviously puts a great deal of kind of emphasis on what it's like. But of course, the immediate impact right in the beginning was that we were just completely grounded. So, it was a complete shutdown on all revenues. There was absolutely no business happening. And then we sort of had these very, very meager flows that were coming through. And I think, we are largely driven by leisure within our particular space, being a domestic low-cost carrier. So we did see a lot of impact on that. So as regulations changed along the way, as we saw things like alcohol bans, we certainly felt the effect of sentiment shift in that regard. But I think to echo Marcel's earlier point in terms of the definition, air access is a key economic enabler. And so, everything in that regard is impacted by these kinds of regulations going on. And we see both a degree of pent-up demand when it is restricted, which I think is part of what we're seeing emerge now. And then, of course, also, that contraction when things go badly. So, a simple example, someone seeking perhaps not essential healthcare that might need to travel for that. Under a period of COVID, that's not happening. All of that travel is not happening.
Yeah, thanks, Kirby. And Marcel, on your side in the hotel industry, can you give us the same sort of view from your segment of the sector?
So, obviously the start of this was just terribly traumatic because it was a hard shutdown. As you said, we hotels who haven't closed their doors in 40 years. They don't have a front door lock on it. It's not meant to close. It's a 24-hour business, and we closed down 112 of them in 5 days. It was just hitherto unseen type of stuff. As that started to recover, I mean, it came very, very slowly. But the minute people stopped having fear and the regulations lifted, there was a definite pent-up demand for travel, which we first saw coming through in leisure. How much of that is, I just want to get away, I want to be out the house? How much of that is visiting friends and family? You never really know, but we saw places like Beverly Hills, Arabella, Mount Grace immediately picked up that people just wanted to get out. And as over the course of, it's nearly 2 years now, we've seen sort of various stages of recovery. The leisure sector, government, and essential corporate travel have been the things that have kept us alive. Government has to move to function, but are very dictated by our regulations, so they completely switch on, switch off, depending if you're under some lockdown or not. And leisure across the board has kept us alive in many ways. It's also quite regionally different. So Durban as a city has done substantially better than Johannesburg or Cape Town through this process. And one of the reasons for that is you can drive there. So the uncertainty around air access, the fact that most of the airlines weren't flying FlySafair, they were capturing total market share there at some stage, that you just couldn't get to Cape Town. Cape Town is very isolated from the rest of the country like that. You can't go for 3 days driving to Cape Town, but you can go to Durban. And that's where things like the riots of last year were like a double whammy on top of everything else. The minute the N3 to Durban starts closing down, that's a total disaster. So it works in different segments. Overall recovery is still quite far off. You need corporates, you need international, and that's not back at the moment.
And spontaneous red list bans certainly don't help that cause.
No.
So if we look, Kirby, back to you in terms of, how did your company have to adapt in the new operating environment? What were some of the immediate levers you pulled? What are some of them that have been unexpected benefits that have come out of it? And do you think, as an example, the SA government has done enough to assist the sector, particularly in your space, around how you've been able to kind of survive and remain resilient during this time?
I think there are a couple of sort of universal experiences and universal realities that we can certainly relate to. So things like leaning down your operation, looking at where perhaps you can automate certain tasks, where you can create more efficiencies, both from a cost perspective and also from a sort of human capital perspective, is something that we've certainly experienced. Some of the trends, such as work from home, for example, well, it's a bit difficult for a pilot to work from home. So, that's not a reality we can take much advantage of. But, certainly a lot of the other kinds of realities have come in place. And I think what we found along the way, and this is where we were largely in a fortunate position, was a reaffirmation of some of the things that we had been doing in the first place. So for example, we did enter into the COVID sort of pandemic, the hardest part of it in the beginning, in a fairly sort of cash positive position, and that certainly helped us. So sort of a consideration of conservativeness on that level is something that we'll probably hold going forward in terms of maintaining that. And we've always prided ourselves on being quite agile and able to react to opportunities as they come up quite quickly. And that has been key as well in this, because it's been a matter of being able to turn on and off schedules, turn on and off aircraft, turn on and off crews as things change at the drop of a hat. And so, maintaining that kind of fitness and that agility has been key. In terms of state support, we have been relatively disappointed in terms of what we've seen along the way. It's an incredibly complex topic in aviation, obviously because of the state's direct involvement in any regards in our industry. One of the areas that we lobbied quite extensively for during the beginning of the hard lockdown was to try and seek a little bit of relief from state-owned enterprises that are key to aviation operations. And here specifically, I sort of bring to mind entities such as Absa, such as the Air Traffic Navigation Services, South African Weather Services. And these are all organizations that perhaps could have looked at opportunities to try and subsidize the industry at large in a very sort of fair sense, especially with their ability to access cheaper capital through the state than what we would as private entities. And unfortunately, as much as those ideas were tabled, that was nothing that ever came to fruition. So that was support that we didn't receive that we believe would have been quite easily provided.
Thanks, Kirby. Marcel, your views on how you've had to adapt in your space. Obviously, the unemployment rate has hard hit the industry. But if you can give some of your perspectives on how that's been beneficial and not, would be great.
I mean, in the only silver lining in a crisis like we've been through is the ability to completely restructure the business that you would never have if you were operating at normal cruising speed. I mean, the actual cost of the last 2 years is probably somewhere around 800 million in losses. You could never afford to throw 800 million at restructuring the business. But you're going to lose the 800 million anyway. So then you get into the restructuring and you switch absolutely everything off. We didn't just close down the hotels, we closed down head office. So you could basically start with a clean piece of paper and say, what activity am I bringing back? We used to do this. Why did we do it? Because we did it for 50 years. Well, that's not a good reason to carry on doing it. And you went through every single department, from your in-hotel housekeeping, kitchens, front of house, your finance processes, through to your HR systems, your training system. Every single department basically got a clean piece of paper. First, do you actually need this department to start with? And then B, what activities do you bring back? So we will be a much more efficient hotel group than what we were at the start of this. And there was a lot of stuff, and I've been in this business for 20 years, so I'm not blaming others, I'm blaming myself here. There was a lot of stuff where you looked at it and said, I don't know why we did this. It's pretty obvious we should have cleaned this out a long time ago, but it's just human nature when a corporate's running. So we've cleaned out a lot of that. It has had an unfortunate impact on jobs because your single biggest line item in your income statement is payroll. It's a very people-intensive business. Part of it is just shedding unnecessary people that we don't need the functions anymore. A lot of that was more head office based than the units. The other part of it is changing the flexibility of the workforce to the volumes of activity in the hotels. Very much like what you were describing on the airlines having to switch on and off, we've had to do that. So we can switch hotels on and off at the drop of a hat. And we can gear it. Just because it's open doesn't mean it's running full and the banqueting is staffed and the restaurants are full. You can literally switch it on, run at 10-15% profitably and close it down again if demand isn't there. Now, it's ultimately not a good business model. We need to get back to the 60-70% occupancies permanently to get there. But that flexibility I don't want to lose. So that we do have seasonal changes where we're not just running with high overheads during the trough periods of Januaries and so on, which are where the structure's geared to cater for the peak season of a December or a March, and you just carry that cost through. We've got to permanently change that. As far as state support goes in hotels, we weren't disappointed because we expected nothing. And like government is not capable of doing anything for us, to be honest. The only financial type of facility that came through was the TERS payments, which allowed people to get pay where they would otherwise have got nothing. So that was very important to keep people in at least food and groceries and that sort of thing. But for the balance, to be honest, we were saved by partnerships that we had within the private sector, so our suppliers, many of which came to the party enormously on deferring payments, changing terms, switching off subscriptions that were contracted and saying, look, you only put it back on when the hotel opens. And then, quite frankly, the banks. We've got a lot of assets, so it's good asset cover, but we're solvent as long as the banks say we're solvent. And a lot of that is around convincing credit committees and that sort of thing that this is not a permanent structural. We're not manufacturing VHS tapes and the world's moved on to DVDs. Ultimately, travel will come back. The demand is there. People are going to move. That human nature to want to travel is not going away. And keeping that confidence within the sector, is critical to get. Otherwise, I think it would have been tickets on everything.
Yeah. And I think, just a comment, one observation at least from my side, is that the way you've described your businesses and how they've adapted definitely needs to be attributed to leadership and leadership style, which has obviously been very critical in being able to maneuver so quickly during all the uncertainties that have been thrown at you. So it's certainly very commendable to see your businesses having come through this, how resilient they've been, and some of the positives that have actually come out of it. But I suppose if we think about the future, I think that a lot of questions will be asked, well, what is the future of the sector? What are your key dependencies, your key risks, and how do you see your own sector sort of morphing into something new or continuing on the same path? So any sort of views on what we can expect would be quite useful. Kirby, maybe I can start with you, please.
Yeah, absolutely. Look, I mean, I think the trajectory of growth in the aviation space in terms of growth of passenger numbers and the yields that we achieve is so strongly correlated to economic growth. So, I mean, that's just the most basic thing to say across the board is that, you know, we need to see some kind of growth and activity in the economy at large in order to be able to see, you know, our business grow from that perspective. In terms of opportunities beyond that, I think, you know, there are a couple of interesting avenues that we've explored. I think what's been quite a challenge, and as much as Marcel says, you know, you look at your structure and you have this opportunity to restructure, I think we've had excuses and times to start looking at perhaps diversifying our risks slightly and looking at new things that perhaps we wouldn't have looked at before. So by way of an example, you know, FlySafair has got a fairly strong presence in an e-commerce environment, you know, besides our entity as an aviation operator. So we've started embarking upon opportunities to actually broker and sell other airlines' flights where there's non-competing, as a small example of something that we've managed to do to try and change the landscape and try and change our future in that regard. I think we're also due to see some interesting trends emerge. I mean, South Africa is well known for having a fairly strong commuter culture, especially between Johannesburg and the coast. I mean, we've had certain routes that have been absolutely sustained by that, you know, by folks that will come up to work a work week in Johannesburg and then return to families near the coast. And so the whole trend of semigration might add an interesting dynamic to that front as well. So we're very bullish about what the future looks like. We believe that there's a growth curve ahead of us for what needs to happen. We maintain that, you know, what we offer is, whilst sometimes a luxury service from a leisure perspective, I think with the broader definition is still an essential service. And so we do see a future for aviation and for aviation growth in South Africa.
And a quick note on competitor landscape. Any views on that?
Look, I mean, it's an incredibly complex topic. Obviously, we know that there's a lot that goes into it from a political perspective as well. I think what we largely look at is we trade a sort of commodities market in many regards, and so everything is determined by what the demand looks like and then what sort of supply can be popped into the market at any given point. And then we all basically fight on price, you know, when it comes down to it. And so we do see that there's space for competitors at this stage, and we're glad to have them. I think it's important. I think one doesn't want to see any kind of substitution away from air towards road, for example, where air is a viable opportunity or a viable option. So it is important that we see some experience there. Looking at the last couple of months, I'd say that the market is right-sized. We'll have to see what opportunity there is for growth going forward.
Thanks, Kirby. Marcel, some of your thoughts around the future, what we can expect?
So at the moment, when I talk specifically around Tsogo, we very much focus on survival in the current, and we're still in that survival phase. You know, we turned cash flow positive October, November, December 21, but we're not going to be in January because it's just January contracts again, and still trading at about half our normal type of levels. So we're still in that survival mode. We haven't gone into the recovery mode where you are strongly cash flow positive, refinancing debt and that sort of thing. And then, so the growth mode is to me a little bit further off, because all we have to do in the short term is survive and then recover. And then if we, in that recovery period, we hold on to the efficiencies that we put into the business, the actual structural benefits of taking out the hospitality fund and all those sort of deals we did, I think we're going to become... we'll definitely produce more cash than we did in the past just by getting back to where we were. How you grow that when you're sitting on 35% of the SA formal hotel market, that's a little more opaque to me and needs a bit more thought, because I think, as you were saying, like, you guys went into this with cash. I would love to know who's actually going to come out of this in the hotel side still standing, because I think there was a lot of new build that happened just before COVID hit. We're sitting on historical cost that goes back 50 years in some cases. You know, we've got debt to asset value of 20% or something. Not quite cash on the balance sheet. My shareholders won't let me, but I do ask. But there's a lot of people that are sitting on 80% loan to value. I don't think they're going to make it, to be honest. And so that growth opportunity going forward is, quite frankly, industry consolidation again. Picking up those who fail. We've always said the third owner in a hotel usually makes the money as opposed to the first one. And then seeing and holding on to the efficiencies we put in place is absolutely critical for us. We can't have gone through all this pain and then just let it go because the world goes back to normal. And there's quite a lot of internal focus on that because people want to go back to normal, but your department's never going to be the same. So that's quite a big focus for us. And the other opportunities will come when we get there. It's still a very uncertain landscape.
And Marcel, we're sitting here in Sandton, and fortunately we've in the office been coming back this week, and it's been great to be back at the office and sort of at half capacity. But traffic is still quite low, and Sandton is quiet. How do you see Sandton's future, and how do we compensate for some of those low occupancies that we're seeing?
So Sandton's probably the weakest market in the hotel space in South Africa. It achieves the lowest rates for the relevant product that we've got, followed by Cape Town, and then Durban is the strongest. Now, Durban gets a lot of government support. Durban and Umhlanga, I'm talking as one sort of stretch. They get a lot of government support in, like the travel. The KZN government moves a lot, municipalities move a lot, and you've got the business leisure travel movement between Joburg and Durban is strong. Cape Town has its local market, which is there, but it's built for international. So your capacity, if you didn't have an international market, would be half what it is. And that international just needs to be switched back on. And the consequence of a red list type environment that we just had now kills everything until probably summer of 22. Because you do get people that travel on short notice, and by and large not. So we're not going to have the tour buses, we're not going to have the big aircraft full of people until next summer. So that puts Cape Town on a back burner until then. Sandton is a mixture of international travel because it is still your economic hub of South Africa. So you've got to have your African travel, your European business travel and so on coming down here, which is all not happening at the moment, plus your corporate market opening up. And that is the last portion that hasn't happened yet. I mean, as you say, you guys have only just come back now. Standard Bank building is empty in Rosebank. That building I know has 4,000 people in it or something. Like, this has to come back in order to get this market going and the whole activity within Sandton happening. It was an area that was in oversupply before COVID came, and that's going to take a long time to wash its way out. It's at an office oversupply, it's at a hotel oversupply, it's at all sorts of oversupply. But that's normal in the longer cycles of a city. I don't think Sandton's going to fall apart, but it is the last to recover. I mean, fortunately, our stock within Sandton is Sandton Sun and that sort of thing, right on the edge of the shopping centre. So it's been the little beacon. It's been open all the way through. It's done particularly well, but it's artificially good because all the competitors' stock is all still closed. So you can see it really is the last suffering part of the industry.
Thanks, Marcel and Kirby. I think that's all we have time for today. A really interesting conversation, one that we could chat about all day. Particularly nice to see everyone face to face again, and I look forward to further engagement. But just to say thank you very much for joining us today, an insightful conversation, and really I feel that there's some green shoots in the sector, and the performance that we've seen, as I've mentioned before, is commendable, and really all the very best for the year ahead, and look forward to working with you. Thank you.
Thank you.